The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, and this is the Tiger Technicians Hour. Great to hear Tom O'Brien right back in the saddle again, and after a terrific break, talking about Newport. I remember last year when I was down there, there was this three-masted, I don't even know what you can call it, because it's sailboat, but everything was automatic. Sails went up, everything was automatic. And I was talking to someone this time I was there. I don't sail unless I'm invited to go, but I just love the ocean, I love the water. And I was talking to a guy who was putting together a boat to race, must have raced last week, and he was telling me that the ship that he has, at that point that he was working on, that he was going to sell for someone whose home is in the Newport area, one of his homes. He said it's really nice to have the automatic sails, but he had other terminology for it. But if there's a problem, there's a real problem. He said in the old way, you go up there and you use the ropes and work out something else. That's it. Problem, you're done. So it was very interesting. Modern technology. It's like when we go on and we have a problem with our computer. It could be just one inflection point, 1 0 or 1 dot that is in the wrong place, and we just don't get on. And that's all you need is to fix that one thing. But you can't find it. It takes a long time to find these things sometimes. So modern technology, we're talking about technical analysis right here in the Tiger Technicians Hour. And certainly what I want to look at is the relationship that I've been talking about for quite some time, and that is the relationship of the volatility index, the VIX index, to selling and buying, and what I'm looking for this week and the parameters I'm looking for. So let's just run the numbers down. The Dow is down 46. It was down a little bit more earlier at 12,725. The S&P is down 2.5 at 1352. Comp index is down 7 at 2929. Now, gold is up 9 at 1588, and the silver is up 46 cents at 2735. Platinum's up 2.53 at 1447. Now, this is very important to me. High-grade copper is bouncing a little bit. It's at 3.42. It's up 1.55. We'll perhaps look at that a little bit later on. But crude oil is up 96 cents at 85.44, and we've got bonds up a half a point. Now, that half a point, it's kind of good because it's given the TLT. Oh, well, let's just run this through. The TLT is the Lehman 20-year T-bond fund, and it is at 127.76, up 70 cents. That up 70 cents. Now, for those of you who are looking at Tiger TV, let me just press this little button here because I lost it on my cell phone. There it is. I want to be able to see that you are looking at the same thing that I'm looking at. I'm going to squash it a little bit. Remember, the chart on the left is the daily. The chart in the middle, right there, is the weekly. Chart on the right is the monthly. So let's go through these one at a time. Why? Because the three bears are going to be so important this week. What are the three bears? Fixed C, Bondy, and Dolly. The volatility index, the bonds, and the dollar. So here we go. I've got the breakout, and I was discussing this actually for at least a month and a half. I've been discussing the pattern when bonds, the TLT made 130.38 a high, followed by a particular that was on the 1st of June. Well, it was followed the next day with a doji. I have a specific thing a special way of dealing with these particular dojis. In one of my Master Trader series, or was it one of my webinars? Yep, and the Master Trader series, spent a lot of time discussing the function of dojis in my work. Could be completely different in others' work, but in my work it is really important in certain aspects. Well, when the price broke down the following day, on the 5th, what happened is that the price came straight down to 124.39, and then it bounced up in a single leg A. I call that a single leg A failure. Another technique that I've developed. Then when it pulls back and breaks to a slightly lower low, 124.38, and then bounces to another peak A and becomes an A minus at 127.34 by pulling back to 1 124.09. Notice they're all in the 124s, but lower lows. That point you get the dreaded H. I even drew the pattern here. The H becomes an M, a continuous M formation. That M formation, after it retests and breaks below the left side low bar, in this case it's the 127.39, although I'd like to take 124.38 as well into consideration, but usually it's the far side left. It went to 124.09, and that says the next rally, watch closely, because if it takes out the arch high, in this case 127.34, that is going to signal a chance to go to a leg C and a leg D, and it could be a really strong rally. And the technique that I developed says that if it does that, look at the divergence in the technicals to essentially give you a new buy signal. So now I'm using a whole bunch of ChapmanWave methodology. One is just the H goes to an M, the M eventually has this continuous arch formations, and then it makes a lower low, and that low, if it bounces very strongly, especially if it's closed above the left side low, which it did, can go above the left side arch, and that can be a very powerful move. Then you've got the pattern that I call the restart. In other words, you get a buy signal, and it breaks to a lower low. If the technicals, the MACD and stochastic in my case, are moving higher, that says, haha, this could be a buy signal that goes to a buy mode. What does that mean? It can go to a leg D. This is T-bonds daily I'm talking about. But wait a minute, I've been talking about this for ages. I said that the patterns that we've been looking for in the rectangles can form a rectangle formation, and within the rectangle formation it could still go to the previous high. Well, 125.03 was the weekly high back in October of last year. It pulled back to 109.82, 82, and remember the 109s held on a closing basis. It went to 109.69. That was, I think it was in March. Yeah, March, the week of March the 23rd this year. Closed above it, and now we've got leg A, B, and then an alternate wave count. I don't want to make this too complicated. I'm doing this mostly because my subscribers and the folks who have done my Master Trader series know exactly the way we're looking at this. And what it says is the previous high of 130.38 has an alternate count as long as the technicals are holding well and the MACD is holding well, and that could retest with another inside wave, which would be peak A, B, C, D. Remember, another buy mode. And that could retest the previous high. If it takes out the previous high, if bonds go to TLT, the 20-year Lehman T-bond fund, iShares, if it goes to 130.39, it starts leg D up. Then I have to move over to, if it does it in July, I have to move over to my monthly chart, and it says, hey, wait a minute, that's fantastic action, because the MACD is still very strong, the stochastic is still strong, and if I go to the US.P, if I go to the continuous contract, bonds are holding above the previous price channel that was so important, that was resistance, and for 2 months now, it's been, this is the third month, but it hasn't finished, but so the previous 2 months, it's been above the trend line. So all I can say is, if bonds are going to rally, that says money is still coming out of stocks and going into bonds, number one. Number two, it says that the dollar is something that I have to watch really closely, and that really closely is the dollar index on the daily is in leg B, but it doesn't mean a thing until it breaks above 83.54. That was the high on the high on the 1st of June. If it does that and closes significantly above it, rather than leg E going to leg F, that I have to consider is a breakout, and that's very positive, because immediately I have no choice but to go to the next time frame up, which is the weekly chart, and that weekly chart says, whoa, there's an inverted head and shoulders. Where's Rick from British Columbia? There's a pretty good chance that we've got some form of a head and shoulders here that's breaking to the upside, but the dollar won't break out until 83.56. Let me double check here, 83.56. 54. That whole 8350s area is decisively pierced. If it does that, then all of a sudden the 200 period, notice how we're moving in time frames, and that's the most important thing, is how do you learn to use one time frame to hand the baton over to the next time frame, to hand the baton over to the longer term, or going from the longer term in my hat trick tops, going from the longer term to the shorter term, to the very short term, because you've got to start off from a daily to a weekly to a monthly to confirm the monthly going down. Same way on the upside. Now, the dollar says if it holds very nicely like this and it takes out 85.40 in the next month or so without closing under 80.42, these are big numbers now, the 9-period exponential moving average, then 88.17 would be the 200-period exponential moving average, which everything right now is pointing towards it going to, unless there's a really fantastic turnaround to the downside. And that would imply that the euro, EUR-USD, the euro is going to turn around in the monthly chart, and that monthly chart is still very weak for the euro. The weekly chart is still pretty weak, and the daily chart says, yep, it's in an area where it could rebound, but the arch formation is even a bigger arch formation. The arch formation says that if the 1.22873 low of the 1st of June is decisively taken out, all that can happen is that you might be able to bounce back in to the arch, to the 1.24 area, 1.244, but you're pretty much going to have to do a bunch of retesting to build upside strength. Okay, so that's that, and then I thought that was very important. Now the VIX index. So my subscribers, every day we go through, I give the numbers to watch, and I give the parameters and the different indexes to watch. We are entirely short, but that doesn't explain what I'm doing. And I did make one mistake. Oh, I can't believe I made this mistake this morning. I wrote a 7 instead of a 9. And if we had got that exactly thing we would have added to one of our shorts at exactly, almost precisely the high of the day. And now it's pulled back really sharply. But that's the way it goes. My error, we're not losing anything because we are still short. But it would have been nice to have had that extra trading position, which I wanted. And I've said that at 11:15, if such and such, the SPY, is at a certain point, then we want to be buying. If after 11:15 it's at a certain point, we want to be buying a short position on one of the indexes. Why? Because it says to me that if the SPY is, let me just give you this right now. I won't tell you the exact number. That wouldn't be fair to my subscribers. But if the SPY is starting to go underneath the 9-period exponential moving average and closes under there, even though the VIX index, and I'll get to that in a minute, even though the VIX index is still only at, if I can move that away, will I be able to see it? No, I don't. If the VIX index is only at 17.84 under the 18s, the fact that it started a potential move up towards testing the retracement area, that's very important to me. So I want to be prepared, and the stop can be fairly tight. Basil Chapman, 877-927-6648. We'll be back with Michael in Long Island straight after this break. Very important break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pezzavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing.
Stock market corrections are the number one reason that a buy and hold investment strategy produces the poorest results, and I have 73 years of data that proves it. Now, the good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time period has been spent in recession. And if you're one of the 70% of American households relying on their 401ks and IRAs for retirement, you need the single strategy that is bulletproof against the turmoil of our stock markets. Go to the homepage at TFNN.com. Under Breaking News, click on Success is a Numbers Game to receive this must-have free report. This bulletproof strategy may be days away from giving the next signal. Don't neglect your retirement, and don't neglect this signal. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then go to TFNN.com to order your free copy of Success is a Numbers Game today. Implement the disciplines contained in this report, and success will be yours for the taking.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now. Just like that, another month has passed, and the Great Panther Silver Summer Silver Giveaway has come to an end. Each market day in June, one lucky winner was chosen to receive a 1-ounce silver bar, courtesy of Great Panther Silver and TFNN. We'd like to thank all the listeners that chose to participate, and if you weren't lucky enough to be a winner this time around, be on the lookout in the coming months for another opportunity to win a 1-ounce silver bar, courtesy of Great Panther Silver and TFNN. Thanks so much, and good trading.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi everyone, Basil Chapman. We're back. The Dow's down 56, S&P's down 8.5. S&P's down 3.7. Comp Index is down 8.5, and bonds are up about 0.5 point. I would have expected them to be up a little bit more, but they are moving higher. And we are on right now with Mike in Long Island. Hi, Mike. How are you?
Good, Basil. How you doing?
I'm very well, thank you.
All right. I want to look at Salesforce.com.
Okay.
Mark Benioff's company. In the weekly, is that a B- failure? And
I have no other way to count it at this particular point as the potential for a B-. Let me explain what to folks, and this is very unusual. Going to an all-time high, I have no choice but to call it that because the previous low in the weekly chart was at 117.66 the week of the 18th of March, and then it went to a peak E, gave a beautiful sell signal, and then it ran up in the single, well, it's not a single leg A, it went to A and then to B, but A was just such a slight pullback. It went from 146.26 high the week of the 24th of Feb to 146 round number high on the week of the 2nd of March, and then it made a new high. So this is very important. Now there's a couple of things that I have. Are you already short this?
Yes, I'm short.
Okay. So now let's do something else. There are a bunch of chart patterns that I've done on this particular stock. And you might recall that I've spoken and I've talked a lot about a pattern that I call the ChapmanWave flat base restart. And that is when a stock goes to a peak D, pulls back, then starts an A, and even a B, but it keeps coming back to the starting point. If ever there was a most incredible GPS guide to say this stock is eventually going to fail and break down completely underneath the starting point, this is just a great technique. And what happens? It goes to peak A, B, C. It goes to a wide-legged doji. That's another technique that I love to talk about. A wide-legged doji on the 19th of April. It opens at 159.40. Spikes to 164.75. Zips down to 157.80. And then what does it do? It closes at 159.57. What I talk about when I talk about a wide-legged doji is that body, that little tiny body there at 159.40 in that area, that becomes like a magnet, so that even if it breaks down or it breaks over it, eventually that price is going to be hit at least once, or at least attempted to get real close, even though you didn't think it would do that, and then it will continue in the direction of most significance. And in this particular instance, it goes all the way down to 147.50. That was the biggest pullback that it had had since it gapped up way back in April. What happens is it comes back and then it goes all the way to 163.50. That's only $1.25 away from the high of April the 19th. Then it pulls back. So now what has it done? It's filled in the wick, the long-legged wick. It's filled in the little candle, breaks down and slumps down to trough F, which is the sixth lowest trough, the lowest low bar trough, goes to 125.25. So that's already a 40-point pullback, has a rally in a single leg A up to 142.47, pulls back, and then goes to leg B, and today it's pulling back under the Roman candle of last week. And Roman candle of last week is fitting because we had July the 4th. Now what we're looking at is that the stochastic is way down at 72%, but the MACD has not yet turned negative. The histogram is even positive. So that says price is moving based on the lack of the stochastic getting over 80% and holding. So the price is starting to slip. If the price goes underneath the low of 129.65 on the 28th of June, that's going to be a big negative. Now what I'm going to do is I'm going to skip the weekly again. It's got a beautiful little kind of cartoon character pattern, but we won't talk about that. We're going to go to the monthly chart, and we're going to look at the pattern that was an arch formation with a single leg A up. And then what does that do? That has an alternate wave count, and it's an unconventional wave count. It is a ChapmanWave flat-based restart from the 95.10 low after peak D. Then it pulls back and goes to 97.92. The 97.92 is really the start of this move, and it goes to 94.09, slightly lower. But the unconventional flat-based restart says that you can still expect, even though it went underneath the original starting point, that it's going to go to a high of D, E, or F, and then it's going to plunge and come back and retest the 95s. So the monthly chart and the daily chart are saying, yes, you're right. So now let's look at the weekly chart. Got a break coming up. We'll look at the weekly chart, and then I will tell you what my conclusion is as to what should happen with CRM, because I believe it is heading lower. But how do you trade it in the next couple of days? We'll see. I'll be right back. 877-927-6648. Be back with Michael.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. Has the current market volatility continued to stop you out of trades when temporary market spikes move against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the advantage of keeping your trades open even when the market temporarily spikes against you. Nadex's innovation has allowed them to come up with a line of unique short-term binary options that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and the Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi everyone, Basil Chapman. This is the Tiger Technicians program, and I'm going to just get rid of this. I've got MasterCard. I've got to remember this. I had a question about MasterCard, had a question of UA, and we're on right now with Michael in Long Island, looking at CRM, and that is Salesforce.com. I don't know why that doesn't ever work anymore. I got to put it right there. CRM, and there we go. Okay. Now, this is what I'm looking at, Michael. What to me is really important about the stock is that Ben, whatever his name is, this guy has produced the goods. Unlike one of the other guys who used to come on CNN and TFNN, no, what was it called? CNBC, that's right, CNBC, and constantly talk about his stock, talk it up, and then all of a sudden they would have a big earnings miss, and that was Athena Healthcare, but then the stock went on to do very well. This guy seems to really produce the goods. The difference is that over the times that I've heard him over the last maybe 2 months or so when I've heard him, it seems to me he's pushing the envelope. I'm very hesitant about the potential right now. I think it's a great company, but I don't think they can produce the goods. This is from the chart graph. That's all I'm saying. My suspicion is that if CRM, if it takes out the high of last week of 143.84 and it's at 132.17, I'd be very impressed. I'd still say it's going to stall somewhere in the 151.91 area. So those are the upside parameters that I look for if I'm wrong. I suspect that this thing is going really quickly down from 132.12 where it's at right now, down 362. In this flat base restart, everything I'm looking at says this, the MACD is deflected lower in the monthly chart. The stochastic's negative. Everything about it says the price is up artificially. Now, the price is the price. I might say it's artificial, but the price is the price, and it's only in the middle of a trading range. But if this thing takes out 125.25, closes under that this Friday, I have no hesitation in saying to you, everything really does point to this thing going down to the 125, but probably the 122 to 120 area, but probably to test the 95.10 and break that 95.10 area. Now, if that's the case, I'm looking also at something like an IBM, which has been a stellar performer, which the weekly chart has a very similar chart pattern. The daily has already broken the low of the left side low. The monthly chart says to me, wow, if I'm getting some kind of a sell signal, I've already got in the monthly chart from last month the chance that, well, the weekly has gone from a sell signal to a sell mode. Now I'm on a sell signal in the monthly. If I'm looking at a hat-trick top in IBM, one of the best performers on the market, I just have no choice but to be very, very cautious, which is why we've stuck mostly to shorts in my portfolio, and I've tried to add certain stocks, either IPOs or stocks that have held really well, to the long side, very selectively. It's been a bifurcated market. My suspicion is it's going to become less so if that volatility index starts to get to the 19s by tomorrow and into the 20 by Wednesday or Thursday. I think that we're starting to come down real sharply, and the dollar's going to move higher, the bonds are going to move higher, and the VIX will move higher, and stocks like Salesforce.com, IBM, and even MasterCard, which I'm looking at. I'm going to look at UA for one of our dinners in a moment. So I think that the best thing, if you are short CRM, the way I would look at it is I would look to add to a position. If it had a bounce towards it's at 131.79, I'd add a trading position at 135.50 to 136.50. And on that one, I would have a fairly tight stop of about $3.50. That's not even 2%. It's really small. And then if that starts to tumble, that trading position, your core can be held, and I would use that trading position to if CRM takes out 125, closes underneath it, that then can have a much tighter, the trading position can have a much tighter stop, and then you would want to add back to that trading position if it's taken out. But my guess is if it does take out 125, it's going to be a real quick trip lower. So I hope that helps you.
Yes, it does. Thank you very much.
Thank you very much for calling. I'm going to go to, we've got Warren. Hi, Warren, how are you?
Good, Basil. I want to look at J.P. Morgan Chase since the bank wars, it seems, have begun with Barclays and J.P. Morgan here.
Okay, now this is really a fascinating chart, folks. If you look, there's a technique that I call the single leg A. I spoke about it just a few moments ago. J.P. Morgan was once at 53.25 back in with a doji candle back in May of 2007. It goes plummeting down to $14.96. I would say that was a bit of a disappointment there for the longs, and then it comes running back to a peak ABCD. JPM is a symbol. It's trading at 33.71, down 19 cents. It goes to 48.36 in February of last year. Then it plummets. Oh, if the other one was a plummet, this was just a pullback. It's pulled back to 27.85, and then it has the single leg A of 20 points. Believe me, that is a really big percentage move, and it goes to 46.49, and now it's come down. Last month, it went down to 30.83, and so far the 9-period moving average has been a repellent. The MACD is turned down, but it's not as negative as it was before, but the stochastic is turning down quite sharply. So you have no position in J.P. Morgan?
No, but I want to try and get in because it crossed over 34.21.
Okay. This is what I would say to you. Let me just say, if you want to get into it, what I'm looking at is the pattern that's setting up right now. There was a beautiful cup, left side, right side price time match, but it only went to a peak C. In my work, a peak C that goes to, it's already a peak C minus now because it failed, it's just very negative. And when that happens, you can expect a very sharp pullback, and that pullback will go right to the base cluster formation. And in this case, the base cluster formation has between 30.42, the low of December of last year, the week of the 23rd, and 28.28, November the 25th that week, and the week of the 7th of October, 27.85. But it started to try to form a base at the 30.83 level. Now, on a bounce, I would say that this could bounce, but it's going to have a lot of resistance between 35 and a quarter to 36 and 3/4. So how would you play that? Now, let's see. See, I don't have anything that says there's a buy signal.
Yes, I want to short, Basil, because it went under 34.21. That was my point.
Okay. I thought you said that.
Yeah, you know me. I watch this. I mean, I watch this like moment to moment, hour to hour kind of.
Okay.
I mean, I have a lot of patience, Basil. I only do a few stocks.
Okay, now if that's the case, then here's my recommendation. The stochastic is flat at 7.55%, but it can bounce, but it'll only be a bounce. The MACD is still negative. Probably the best short would have been either on Thursday or maybe Friday. Now there's a little bit of a risk because it's got the doji. My rule of thumb is the doji candle says if it closes below the wick of the day before, or the bar before, that would be under 33.54. Within 2 days, it should either have a bounce back to touch the candle body, and that body would be the body of 33.92. But if it closes on the second day below the first day's candle's wick, that is, then you're on your way down. So here's my recommendation. I would start a small, and I'm saying a small position here because you kind of lost the best opportunity, only just in terms of risk reward. I'm getting the MACD turning down, but the day's still young, and the stochastics way down 26%. Why don't you start a small position here, knowing that if it bounces into 34.12, that's the high of Friday,
right?
You can expect another day up, but the third day, that would be Tuesday, that'll be by Wednesday, it has to be coming right back to at least the body of that candle, the 33.92 area. Okay. So you see what I'm saying? You got the candle of you got the candle of Friday with the little body, you got the doji wick, you're going under it. If it closes underneath the candle low of 33.73 of Friday, that says that tomorrow is a very critical day, because tomorrow is the day that it could turn around to try to get back to touch that wick, the body of the candle of Friday. If it doesn't, you're in a great position, because then it's going to go lower. So start a little position now.
Okay.
I'd be a little careful if it closed over 34.12, because then I'd make my stop 34, 35, something like that. But if there's weakness going to Wednesday morning, and it is below today's low of 33.54, you've got a really nice position, because it says that it could go all the way down to test 32.51. I am wrong if this thing closes under 34.50 by Tuesday afternoon or Wednesday morning.
Got it, Basil. Thanks a lot for helping me out on that. I appreciate it.
My pleasure. Thank you so much for calling. Now let's look at UA. UA is Under Armour. Under Armour Inc. is trading at 91.51, and Zip in the Den wanted to know, just wanted an analysis of it. Now I'm not sure, I can't remember if he said it's short or long or whatever. I would be looking at the short side of this, and the reason is it's got that same flat base restart pattern that I'm looking at in the weekly chart, just because it keeps making the highs aren't sustainable, and I'm pretty sure there's going to be a PE top in the monthly chart of 107.86. Now what I'm going to look for, I want to see certain candles. Now 104.05, okay, nothing there, one there, nothing there, nothing there. 102. The open of 102 on the gap down day of the 21st of June. Under no circumstances in the next month should it go over 102. My suspicion is that it's not going even close to 102. That the highest that this thing can bounce, if it's going to bounce, will be 95.64. That'll be the 9-period exponential moving average in the weekly chart. I suspect the apparel stocks, this is an apparel stock, are all going to be under pressure. I think they've made their major tops last month and the month before, and I'm looking at this as there could be an H formation, and it could retest 88 to 87.50. And then there could be a bounce. But even within the bounce, I suspect that we're looking at 96 as the maximum on the upside. But if it closes decisively under 89, that's the round number low of the 28th of June, then 87.47 will be absolutely critical because it could go sideways, testing the 9 EMA. If on Friday, this Friday at 4 o'clock, Under Armour closes underneath 86.50, then it's going to very quickly test, wow. Well, if it closes under that, then any bounce is going to be just a shorting opportunity, and I suspect that it's going to go to the 82 to 80 level pretty quickly. So that's my analysis there. And then email with MasterCard. MA is a symbol. MasterCard. Now, I've been doing such a lot of work with the tops of these stocks, and the stocks I'm looking at, stocks that have made round number highs, or the monthly charts have made fractional lower highs with a lower monthly bar. In other words, two bars, and the second bar, the latest bar, has a fractionally lower high bar than the previous. So if you made a high in May of 80, if you make a high in June of 79.89, I'm watching to see what the next bar is going to give, because if it gives a weak signal, then you've made a pretty significant monthly top. Well, MasterCard made a 462.34 high in April, and then a 466.98 high in May. So that's slightly different. That's a higher high. But it opened at round number 455. For a monthly chart to open at a round number, it's really unusual. Not only that, the high was 466.98, and it closed at 406.51. Way, way lower than 455. Now what we're looking at is that I call it the silent round number on the 5th of July. And it went just 25 cents higher the next day with the doji, and now it's breaking down. If MasterCard, and that's going to be a right shoulder failure in the weekly chart and the monthly chart, if MasterCard takes out 416.76, those are parameters to watch for me. They're absolutely critical. Why? Because MasterCard has just been a magnificent stock, walking the 9-period exponential, moving average all the way up. So, Zip had a call. That's what it was. He had a call on UA. I'd be very careful on the call side in options in this particular market. Yes, there are some stocks that I think are acting really well, but they few and far between. So be very careful. Yeah. So, in the UA example, look, the day's young. So far, the volatility index hasn't really, let me just quickly check that out. The volatility index, VIX, let me put it over here, a different page, is still holding at 17.97, is under 18. So what I would do is I would say, because it's a call, the difference between 91.50 and the low of today of 91.08 might be, if it depends on how far out it is, but it might be slight enough that you want to just watch that low. That's another way you can do it, at least on part of your calls, to hold it so that if it takes out the low of the day, you get out of your calls. Because we can still have a little bit of a rebound if the volatility index is this low. And if bonds haven't really, no, bonds are acting really well. 127.99 on the TLT. Well, those are the parameters I'd be looking for. Wow, we only got one section left. Well, I got something to look at. I got a question in the den if I would look at a stock, and I've got something else I'll talk about. Coming up straight up.
Put the power of the ChapmanWave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's ChapmanWave methodology for several years now. His ChapmanWave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the ChapmanWave and very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his ChapmanWave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Rand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed, with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
Hi, folks. Basil Chapman. This is the final segment. Actually, I had a bunch of calls and emails right as the break was closing, so I'm going to go straight to those. Number one, AMRN was a question, Amarin, which I've done periodically, Amarin Core. Now, this is a biotech. So biotechs, if they're getting approval, if the things that are going on, they have a life of their own. And this has acted beautifully. This is what I was saying, is a bifurcated market only with certain stocks that are still holding really well. And this is one, Amarin at 1504, down 8 cents. I would say that if approval's coming this month, I would kind of stick with the stock, but I would lighten up and still have some when the approval or non-approval comes. Reason being, sometimes these things work their way all the way up to that very moment, and then the moment comes, and it's, regardless of what the decision is, it's a big disappointment, unless it's just a spectacular decision. That's why I suggest holding some. At this point, I would just say I'd lighten up a little bit if it goes above 1560. Maybe take a little bit off. You could even put it back on a little later on. But if for any reason it closes under 14.02, watch really carefully, because that could say, whoops, we're not 100% sure. But at this particular point, it's looking great. Monthly chart is terrible. It was once 1,425, and now it's only at 1,505. But the monthly is improving technically, and the weekly still holding really strong. So If you're waiting for approval, that's the way I would play it. If the approval's in a week or 2 weeks, I would say that this could actually hold up pretty darn well. It's already done so. I don't want to give you any advice because if you're in it, you know more about it than I do. But on a technical level, I would just say as it's moving higher, I would lighten up a little bit. And as it pulls back, watch that $14.10 to $13. And this not even the low. Oops, not even the low. I'm sorry, the high of $13.52, somewhere between $14 and $13.75. You don't want to get it back in $13.50. You might want to add back that little bit. So that's that. And Apple, I had a question about Apple. Now, Apple's actually, I was going to go to Apple. Apple is one of those that's held really well. You know, they're the only ones in the field. So you're fighting it's really hard to say, are they going to disappoint? It's very difficult to say whether they're going to disappoint or not. But what I would say is if Apple can have a high-level consolidation regardless of what the general market does, that consolidation will be between the 644 round number high, the 618. You remember, we still haven't taken out 618. Remember when I said round number 618 was the high of the 25th of April? I said that's going to be a key level to watch. Went all the way down to 522.16. This is leg F/C. Technicals are still really strong. I suspect that if Apple's going to give it up, it'll be forced to give up because the market is pulling it down. And where will it go? 595. If Apple closes under 593, then all of a sudden the trend is changing and it's making that dreaded H in the weekly chart. That'll affect the monthly chart because the technicals are still really strong. So you're looking at a disparate set of criteria in many stocks and sectors. Apparel, I think they're done. Restaurants, I think they're pretty much done. The car and auto parts, truck and auto parts are going to be highly vulnerable in this particular period. Look at Ford. Look at the way Ford is acting. It's made a lower low. Oh, it's about to make a lower low. The low today is 931, and 930 was the low the other day. Remember we said if it gets down to the 9-ish area, 906 to 898 area, you might want to nibble a little bit. But boy, why is it doing so badly when the cars have improved so much? Because of Europe, because of other factors. GM's the same story. This is a very dangerous market that we're in right now. Watch my three bears, Vixie, Bondi, and Dolly. And also, wait for Larry Pesavento. We got a full program the entire day. You can tune in anytime till 6 o'clock. And we are here at TFNN. Thank you, Tom O'Brien, for making TFNN such a great medium. I'll be back on Wednesday. Thanks for being here.